guys, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily stock market analysis, and we look at how the market performed during the day and try to learn something from it and plan for a better trade for the next day. That's what we do. Excuse my voice, I have some infection in the throat, so pardon me on that. So here we have the analysis for the Jan 16 Thursday 2023, and we had a day where the market did a breakout. At least the Nifty did that, and the banks are still at resistance. Let's get into details and find out what exactly and where we are. So begin with, let's see the weekly. The week is not ended and it is still days ahead, but look at this. It is attended a breakout from the trend line. We have the trend line, and then if you see that you can have a weekly breakout that happened, made all-time highs, and then retreats completely, and then consolidates, and then it has been doing so since last 3 weeks. Same with Banknifty. Right. So that particular zone where the breakout happened, that trend line is acting as a very good support in confluence with a lot of other things. Fibonacci, trend line from the COVID times, and moving averages, change in polarity support. So all of this, it's a confluence of support, and that's what is happening. We are more interested on the daily charts. Let's look at that. So this is what you see on the left is Nifty, and the right side is Banknifty. Okay, so here we go. We have the daily charts. Daily charts, you're seeing that it's a trend descending wedge, and now the market is attempting to break out that. Nifty is actually conquered and closed above the 50 and 20 exponential moving averages on the daily. But Banknifty, look at this, it still hit the resistance of the 20 moving average and could not manage to close above that. So there is a little bit of lag. But what happened? What numbers we have for the day? So this is January 9th, Thursday, tomorrow, an expiry day. Nifty is closed 1 day ahead of that with 122 points gained, of 0.5% more than 0.62, and 0.5% gain in the Banknifty, 0.53, 223 points up, and then it's a bullish candle on the Banknifty as well, but a much better bullish candle can be seen in Nifty. It's a wide range bullish candle. Intraday was gap up, and then it went range bound. If you see that, not gap up, it was a trending up move until 12 o'clock when it started to range bound. Banknifty also same. It went up 0.5% above 0.6% or so, and then went range bound. Both indices. That was a price action in the intraday, and that's what we are, right? So we have a lot of things still in not in favor of the bulls. With head and shoulder pattern that we've been talking about in the daily, very long one with the shoulders here far away at the swing low, 22 October. So this is a head part. So that neckline is breached, and then it is hanging on the edge. So that is there, and descending wedge. Now that may not be valid because Nifty has tried to break out of that. Nifty said to do that breakout from that zone. Some more has to be 43 has to be taken out. But remember that there is a lower high pattern that would breach only if it closes about 262, 18,262, and after that it has to close 18,433. Only then you can say it's completely come out of the correction of 6% earlier. So until then you have to wait to be actually bullish. So once again, that zone that we had seen on the weekly, this particular zone, the previous swing low, is a confluence of multiple supports of Fibonacci, trend line, moving average, change in polarity, momentum support also is there. That's all. Right? RSI is 40 nearby and bounce from there. So that zone is going to be very crucial. Change in polarity bounce is still possible on the weekly basis. You can see that it's still possible. So descending wedge breakout on the upside is what is happening in the Nifty, and it is yet to catch up. That's a summary of the price action. 18,262, 18,385, so the resistance on the upside, previous swing highs, and one of the 18,385 would be from natural 23 retracement as well. So clearing that would be really the big up more that can happen from that. 18,142 would be the downside support, previous swing low. 18,070, 18,080, 17, 959, that zone, entire zone would be a support zone, very good It's a Fibonacci 38 retracement level as well as a swing lows, rounding number, and all of those. This is on the Nifty. Banknifty 42,560 is Fibonacci 23 retracement resistance upside, then 42,833 and 43,000 rounding number would be resistance upside. Downside 42,231 and 363. These are the supports and downside to swing lows, and 41,836 and 42,000 rounding number would be supports of after that. Making all of the support zone along with what you see in the open interest levels, which you'll be seeing later. Bollinger Bands had began the downside expansion, but it was arrested today and seems to be contracting and indicates sideways movement. Here also it's sideways movement on the Banknifty also. Right? So there is a Bollinger Bands are indicating sideways on both indices. Momentum is actually still sideways, not at moved in the bullish zones yet. But you can see that it is rising up in the sideways on both the indices, rising up on the sideways. That's what is trend indicator. Banknifty is good news that it is crossed over. You can see that the ADX trend indicator has crossed over into the bullish zone, but Banknifty still is to yet to cross over. But both having falling strength in the ADX. So bullishness and the bearishness, respectively, in the Nifty and the Banknifty does not have enough strength in that. Right? So that's it. Moving on, volatility index. VIX, India VIX is saying that it's cool 1.5% and close to 40.37 nearby zone. So it's nearing to the lower regime. Once again, back to the lower regime of the VIX. The market is rising up. You have to be cautious. It can spike up anytime to the 16 levels of 15% like it showed last time. So until we have the price action cleared at this 18,400, 43,500 that zones, then we cannot be sure that this is for real. Anytime reversal can happen and the consolidation can continue. So we'll be cautious on the big spot, but as of now it is cooled off a little bit today. Flattish, actually only 1.5% cool off, but still below the 15 levels in the lower regime of the VIX. Now the good news is the futures OI is got short covering, long build up in the Nifty. So both are kind of bullish. So this short covering, if it is working out tomorrow, then it can take the Banknifty upside, and then following Nifty also can go up and then can easily close above the 18,300 kind of levels. Its possibility is there. So levels 18,000 and 18,300. That's where the highest put and call writing is seen. 42,000 and 42,500 is where the Banknifty has got highest put and call writings. That's for the January 19th. Tomorrow weekly expiry can. Put call ratio is bullish 1.4, 1.07. So few options OI is completely bullish. Futures OI is also OI open interest is completely bullish. Trend is turned bullish by the Nifty. Momentum is sideways, but rising up towards the bullish zones. Bollinger Bands sideways from the bearishness. Price action, a lot of good supports, and a breakout from the listening wedge on that. So overall, clear bullishness can be seen on a very short term. We are talking about, right? Now, how did the performance of the sectors, industry sectors, happen? So today, good move was happened in metal. Biggest move was 1.65 on the metal. Then IT also moved 0.5% less than that. FMCG also less than 0.5%, 0.39. Pharma 0.5% and above 0.68, and they're all closing green, but reality in the auto they closed flattish. So IT is in the bullish momentum in the short term, but all other sectors are sideways, none of them are the bearish. Sectors across the sector, improvement can clearly be seen. Heavyweights, everything is fine. HDFC Twins have made big moves today, 1.7% up move, and Infi, TCS, ICICI Bank, they all made less than 0.5%, less than or equal to nearby 0.5% up move. So the HDFC Twins made up to nearly very close to 2% kind of a big moves happened there. So Reliance and ICICI is what is lagging. They had been lagging since long, and they were both closed flat. They did not went bearish today. So all the heavyweights, none of them have gone bearish, and they're all in the sideways zone, which is good again. So sectoral across the performance and heavyweights wise also it is good day today. Things have started showing improvement from the bears. That definitely can be seen in the way each of the stocks are performing. Now, both FIS after 16 days or 17 days of selling, yesterday the FIS bought very little, but today again they started selling, but selling very small. Today's entire market was held up because of the domestic institution, which bought big, big in the sense much more than what the FIS are selling. So that's why the market shot up and moved up. So today's market making was because of the domestic institutions. FIS might have followed the global market when the US market had dipped. We know that retail money ignored that and put in the money. That's it. So crude oil is shooting up. That's a worry, but it's still less than 82 as of now. It's fine. Momentum is in the sideways. Dollar index is falling down, which is good. One day 102.13. With relief, the neckline of the cup and handle is broken. This will come down. So bearish moment is what we have shot up. But that much is not reflecting, but still using another cool down a little bit. It's still not fallen below the 81.2 on the edge. So rupee has also gained a little bit, but not too much. Still very close to the near weakest levels historic. So dollar some improvement. Crude oil has negated that improvement. As domestic institutions are helping the market again, while FIs are staying flat with no great big selling happening. Coal has been spiking up. Some red is seen. It's still in the bullish zone, so it's on the top of the channel. Some resistance can be expected if it breaks out from that current gold's cup and handle pattern. If it breaks out from that, then you're concerned until then it should be okay. So let's just see the gold. Right, gold. Weekly charts of the gold, if you see it's a cup and handle formation. So breakout from here to take it to all-time highs. Right, it's a hedging instrument. The only thing is if gold can be used as a hedging instrument, but the only thing is gold normally shoots up when there is a market reversal. Here we're not sure whether it's market reverse or not. We're still on the edge. So SGX is now flat. US markets are red. Yesterday it was red, so it is showing some symptoms of reversal once again. So that's something that you have to keep. So look at this down on futures. Everything was fine when it reversed and then tried to break out and go upside, but a red candle is coming, so it's having resistance in the momentum also. So you have to be very cautious. If this reversal takes it back to the bottom, then we have trouble back. But that is not. It's the same situation that you're seeing in the Dow Jones and in the Dow Jones, S&P 500 and the Nasdaq. It is at a resistance zone, so that's a concern. You don't know, but as of now, it's doing okay as compared to a few weeks back. US markets, but it's in a descending wedge. It's going to break out. It's at resistance. It's a trend line top, wedge, descending wedge top. So you don't know what will happen. So as of now, sideways movement is what you see everywhere. Would it turn out and break out is what you have to keep a close watch. There are some Fed speech that is coming, inflation data is coming, jobs data is coming, all this is happening today and tomorrow. So that reflection of that volatility can be expected from tomorrow in our market tomorrow. So all these SGs and US indices can only be considered only pre-market. Only then you get to know how they traded the day. Today it has just started trading now, so that won't give you much clue. Two stock picks, Siemens and that's along Larsen and Toubro, both engineering companies. There are, let's see, Larsen and Toubro, right? L&T. It's a breakout of rounding pattern, and rounding pattern is 1 year old rounding pattern. Big wide range bullish candle on the weekly basis can be seen. It's an all-time high levels, looks like. Right? Beautiful move. Momentum is in bullish zones. Rising up trend line. Not trend line, rising up ADX trend indicator. So all clearly bullish. But you have to keep tight stop losses below the entry candle. It's on the daily time frame, not on the weekly. Siemens, another engineering company. So here it's a rectangle pattern that is blocked now. Now next rectangle pattern is breaking out. So the tight stop loss below, you can make an entry on the daily. Now and then the reason for picking up this is because the momentum indicator is climbed into the bullish zones. The trend is also crossed over to the trend indicator also is in the bullish zones with rising strength. So definitely Siemens is a long and Larsen and Toubro is a long call. These are for short swing trades. Have tight stop losses defined and then trail as you gain. Right? Tight stop loss are very much required. There's no mercy when you, because these are momentum picks, not long-term investments or not positional bets. These are swing trades. So it has to have tight stop loss, and you have to accept the happy loss if it just triggered the loss. Enter again if you still think it is bullish. But you have to be ready to take losses if it goes small losses. So without stop loss, you cannot play this. At the same time, these are not recommendations. These are all educational purpose. See the chart, study yourself, take it. Now that we've seen all of this, and also on different parameters, let's summarize it. So market did attempt to break out from that descending wedge today, ignoring the Banknifty which is lagging. but Banknifty also is doing well. The short covering there can break out. And for the secondary, Nifty has called the 18K, so which is good. So that's positiveness there. But the thing is, Banknifty is still below the 20 moving average exponential. So got to keep a close watch. Will climb. Basically, right, that trend line support down there from her that bounce up this time still continue to be under close watch, where we'll be able, that would be a comfortable cushion once again. No, that's a safe zone down there. But given the fact that the price is moved above the moving average, at least in the Nifty, or demand sideways, momentum sideways, so all Nifty trend is also bullish on the Nifty. Crossover has happened today. Operators is bullish on both indices. There's short covering on the futures OI. These are all makes me to think that the view is mild bullish. For the first time, I'm going slightly bullish, but I'm little, and that's scary because momentum still, has not climbed the bullish zones. But so, very cautiously mild bullish is what I am. Very cautiously mild bullish. That's all. I wish to be mild bearish, but I had been mild bearish for so long. But today was the first day that I'm seeing a solid breakout that is happening, and the several aspects, combined, if you consider, it makes me think mild bullish cautiously. Right? Weak rupee, Fyers not buying at all. US markets at resistance levels are all high risk that can take the market back to square one, previous low, and even breach that. All possibilities are there. You have to understand the risk, right? But overall, after long consideration, this seems to be breaking out. Small mild bearishness. That's my view. Levels to watch is 17,500, 18,500 in the Nifty, and 41,500 and 43,500 on the Bank Nifty. There are a lot of confluence of supports and downside. That's why these levels are given by considering that. Price action based, if price action swing highs are breached, then we can hope for a rally to continue. So that's how these levels are considered for the medium term basis. But for the short term, tomorrow expiry, 18,000 and 18,200 is the levels. 42,000 and 42,500 is there for the Bank Nifty. That's where the play will be happening as per the OIA data, as well as the chart support resistance levels and how it can play out, possibly. That's my view, mild cautious bullishness for tomorrow. I hope this analysis has helped you to get some clarity on what is happening in the market, what happened today, how we can look for a better trade for the next. So if that help in some way in your next day's trade plan, then please subscribe if you're not subscribing and watching this. Please share it to your friends and colleagues. We need more subscriptions, please, and that's the only way to keep us motivated to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye-bye.